Yeah. Okay. Let's get on with it then. Right. How's everyone doing? Video working, but no voice. Okay. Uh, please try reconnecting. Seems to work. Happens when no audio. Right then, I am going to press on. So, a little bit of background. Our colleague Erin gave us a Forex Today report. Markets turn cautious heading into the weekend. Latest from China, the Evergrande saga continues, and that caused some risk off overnight, it appears. Right, okay. No red news on the calendar for today. It's Friday. We've had all week to build up to this point. I'm seeing potential opportunities in sterling pairs. We'll come to that in a moment. Looking at the yields. Now we're high up um, in this week's range. So no, we're not. We are middle ground. This week's range, we are middle ground. But over the course of a couple of weeks, we're high up. And if we extend that further to a few weeks out, we're slightly higher up. Okay, so we're 3 weeks of rise in yields. Obviously, that's been away from gold. So we've started to come off. We're actually 5 weeks up. Okay, so the path of least resistance is where, guys? Probably to the downside, no? How are we doing for US yields 2 year? We're still sort of middle ground, but higher middle ground, right? So bias to the downside also. Okay. So what does that mean? Could that be a lifeline for gold? End of the week? No idea. Let's have a look. So we're near the lows of the week. Finally took out last month's lows. And we're coming in on the March 23rd lows. Right then. Good stuff. So this means the price has plunged around about $100 since the end of July. The rise in US bond yields is providing a substantial headwind. With real rates climbing as high as 2% with all the activity that we've seen in yields. The highest level since spring of 2009. So that's a heavy burden for gold. Higher real interest rates increase the opportunity costs of holding gold. So fundamentally bearish. Okay, just reply to someone here. Um, is anyone else having audio problems? There will be. You won't be able to hear me, will you? There will be. If having audio issues, will be video uploaded soon after event. Apologies. And apologies for my sniffles. It's allergies, early morning. My garden is a jungle, and I tend to get allergies in the morning. It cleans up within about an hour or two. Anyway, so I'm sorry for the sniffles if you're hearing those. Right, so we're still front side of this bearish trend, but that's fine. That's exactly where we want to be for the end of the week, Friday, because it gives us potential to the upside. So low of the week, low of how many weeks are we? So look, 4th week. Right, so we've got potential here for a uh, long for the day ahead. Maybe we can close the week in a correction of this bearish impulse. Target 50% mean reversion. What's the ATR on the day? Around about 18, 19, 18 bucks. Okay, how many bucks have we done so far? Um, about 7 bucks. All right, so a good 10 bucks to go. Take us right up to 61.8 Fibbo, around 1907, aligning with Wednesday's highs. That's a potential target. Coming down to the 4-hour chart. Right, so we're stacked up above Thursday's close, that red line darted across there. The lows of today. Ideally, before Wall Street, would like to see this coming off before the Wall Street Open for a long trade around 9:30 New York time, where we could see volatility one way or the other. But the thesis would be if we're coming down into New York 9:30, then that dump would be met by the pump and igniting the foundations for a continuation of a move up. Now that looks quite ambitious, targeting all the way up there, but that is the daily ATR. We are coiled, okay, like a spring. You'd expect if there's going to be a move, then coming out of a spring, there's plenty of energy for a runner. So I'm personally hoping for a move lower ahead of New York to see if we can't at least catch a strong move up into the shorts to target at least um, that psychological area up in here, and leaving some on for up in here. Given that we are um, heavily loaded short and below last week's and yesterday's high. So last week's low, yesterday's high, last month's low. There's plenty of breakout traders in here, and the short squeeze is almost inevitable. But how far we can come up, we don't know. But we do know what the average true range has been over the last 21 days in any given day, right? Round about, let's call it rounded up to $20. So that's some good information for us. So we'll put that on the radar. Let's have a look at the US dollar before we move on to other pairs. Let me know, guys, in the chat what you want me to look at. If you've got any questions, you want me to go over gold again, for instance, anything you like. It's Friday. Okay, so looking at the US dollar then, for that to come out of gold, what do we need to see, guys? Looking at the 10-year gold, the dollar, the 2-year, what are we seeing? Is there a common theme here? It seems to me that yields are back under pressure. Is gold going to catch up with that scenario today? Are we seeing the last ditch effort by the dollar bulls? Are we working the high to come down? 1, 2. Is this the third push into the high before the capitulation? Nice theory for our gold long thesis. We get that third push failure, lower highs, even better. Well, I don't mind it coming up in a fake out and aggressively coming off. Either way. Okay, so we've got 3 sessions of rise here. If I come out to I'm on that already. Okay. So we've got the Asian session, we've got the London session, and potentially the US session coming up to come down. So that would be 3 levels of rise on the day at the upper end of this week's range. Okay, and this week's range is like this. The opening balance down here, Monday. Okay, so we're on top of that opening balance. Are we going to come on the other side of it? Seems ambitious. But there's low-hanging fruit below the Asian lows, given that we came up on Thursday's US session, creeping back into that peak formation. Perhaps we're going to have the sell-off into low-hanging fruit below Asia lows, and that would propel our gold thesis into play as that plays out. So keep an eye on that US dollar and how we're setting up for the New York Open, 9:30. Look at some of these sterling crosses. Let's look at sterling first. So Monday, it's been a creeper all week. Came up into the highs of the week. We had 3 sessions of rise here on Friday, on Wednesday. What's going on with this? Okay, that's it. Right, so if we look at what's happened here, we've come up high, peak formation, back into the peak formation, break of trend, and bang. Okay, so currently what we're having today is a pullback, and these are the lows that we need to break. We're penetrating that now, so we could argue that we're already on the backside of that prior bullish supporting trend. So this is clearing out the way for the continuation lower. So we're starting to break that trend. And are we going to have the move up? Probably. How much lower can we come before the move up? We can measure this correction, gauge that the price has already come into the minus 272, starting to retreat. We've got 9 minutes until the close of this candle. Perhaps the next candle will be bullish. And if so, that will be putting on a squeeze into the shorts, and then that could result in the continuation to the downside today. How aggressive that can be, if our thesis is that the dollar is going to come off, then who's to say? But for me, for the moment, that is the outlook. Or perhaps we're just going to come back inside and consolidate and wait for further weakness in the dollar to then resume the downside. So perhaps if the dollar is going to start coming off, we're just going to start jamming up into this trend line resistance, coiling, waiting for a reversal in the dollar to the upside, and then plummeting. Not just you, Gil. Please try reconnecting. There will be video recording. Right. So sterling yen, after many, many days of up and up, green days. So that those triangles are marking the closes. Right, so we have, wow, 1, 2, 3, 4, 5, 6, 7, 8 consecutive bullish closes. So the path of least resistance to the downside. Yesterday was the trigger day. It was the first red day in that series of green. Okay, so when we get that type of scenario, we can expect the continuation. That's exactly what we got coming out of Asia, dropping hard. Dropping hard London and coming back into that, squeezing the short and moving lower. So just bear with me, guys. I'm checking. I'm checking to see if I can change my end. Um, can you try changing microphone under voice and video output device? Maybe I tried reconnecting, didn't help. My speaker worked perfectly well with Discord. I can hear the music if I want to. Voice and video. Does that make any difference, guys? Let me know, please. Or does this make any difference? Any difference? Test, 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 test. Um, so this sterling yen tailed off. That was the first red day in a series of up days. It's come off, and is it now breaking down? Well, if we come out to um, the week's range, right? So Monday opening balance, shot higher. Perhaps we're going to come back into balance, and we're not far off now from the opening balance highs, which is over here. So those would be a sensible target. Um, so it looks like we're heading that way. And sterling CAD, this is an interesting one because we're at the high of the week, and perhaps today is going to be the first red day for this trigger day for Monday, Tuesday. Um, Perhaps we're going to come in pretty low into this low hanging fruit on the day itself. So we've come out of the highs of the week. So all of that up there is trapped. People trading in line with the trend, only to find themselves trapped, right, by that move. We've come back in as a teaser. So you're going to get these people here that got in late, under pressure, desperate to get out of their trade, and tempted to come out as close to break even or as small a loss as possible, concerned that this is going to roll off, which it probably will. So that's essentially what the psychology of this market. And we've got low hanging fruit with stop losses below these relatively equal lows. Those that are in the money, they've been moving their stop losses up, and that would be a sensible, or how do I want to put that, an obvious area for where traders are going to leave their stop losses, and that's probably where we're coming down to. Um, so that's an interesting one on the watch list for today. See how we develop into the more busier time of the New York session, and Wall Street open at 9:30. And let's go through some of the stuff that you want me to look at. Those are the ones that I've just picked randomly coming in. I want to have a quick look at the stocks as well. We're going to have a look at the Aussie in a moment. We're going to have a look at oil. We're going to have a look at all of them, in fact. So let's just go through the ones that I've been asked for first. So euro dollar. Okay, let's have a look at euro dollar. Right, just going to clearing up the chart entirely. So again, number of days in the red. This essentially is a mirror image of the Dixie, DXY. So we've already looked at the DXY. We're in anticipation of a move lower on the day. So a move up in the euro. So if we turn the Dixie on its head, inverse, okay, that's going to be a mirror image of the euro. Right, thereabouts, very similar. Okay, guys, I'm just going to try something. I'm going to try um, to stop the recording. Right, I'm going to put it on pause. Do it. We're looking at the euro here now, so let me clean up this chart. And we are at the bottom of this week's range. Right, okay, let me explain what I'm looking for. When I go through these currencies and pairs and so on, what I'm looking for, where do I want to be? My ideal days are going to be Wednesdays and Fridays. I'm trying to work to the power of three, which sounds more fancy than it is. It's basically just a build-up of flow over the course of whether it be 3 months. So if I was swing trading, I'd want to be shorting something that's 3 months high, 3 weeks high, 3 days high. And if I'm day trading, I want to be shorting something that's taken 3 days to build up, combined with 3 hours or 2 hours at a minimum, right, of build up. So if the market is, let's look at the euro. So we're looking to buy. So we've had Wednesday, Thursday, and Friday. I mean, fortunately, in our case, we've had all week in the red, right? All week lower closes, breakout traders printing new lows and new closes, pretty much, right? So that's fantastic for a Friday setup because we've got the whole week short. And what we can find on a Friday, not always, but it's a fair thesis to presume that we're going to rebalance to the upside, right? The initial balance of this week was a pretty wide range, right? All of that on Monday, and we've had one push out of that range. We've had two pushes, okay, In fact, we've had one push into the low, so we'll count that as 1, 2, 3. We've had 3 firm pushes. So this here, so that was one push. That was another push, getting another push into the opening balance lows. Okay, so that's a market that's working those lows, and then you'd expect that to be met with some form of rebalancing as the market comes up to fill orders that were left behind in all those shorts. Profit taking as well, an element on Friday. So that's basically, I hope that makes sense. Any questions around that? I should be sharing my screen. Okay, let me try again. Share screen. Right, there we go. Sorry, guys. Start again. Euro. Plenty of down days, all down all day, all week, right? So we're looking for the market to come back up into those shorts, essentially. We've had 1, 2, 3. Well, this will be the fourth push because we actually had 2 pushes. We had a push into the opening balance low on Monday, right? So 1, we hit it. Um, we've come down again. We've hit it. We've come down again, right? And today we're trying to come into it again. So, as I said, I want to see a build up of flow to counter trend. And that's where we're going to see the parabolic fast moves, nail and bail, in and out. And we're looking for those setups. Well, at least I am. And at least I think it's a, it's a, it's a favorable way to approach day trading. And we're looking for these moves in the busiest part of the day. So, um, for instance, yesterday, look at that drop. Where did that happen? That happened in the second hour of the, or third, well, the third hour. The third hour of the New York Open. So New York opens at 7 o'clock in the morning, but around the Wall Street Open. So I'll be looking for the same, but for the reverse, around the Wall Street Open today. Okay? So as I said, I'm looking for that build up. And we've got that build up at the lows of the week. So I'm turning that green to signify that we're at support, we're at the lows of the week, and we want to see a move up. We want to see a short squeeze. We can measure the range of any given day using the ATR. So over the last 21 days, you can set that to how many days I want, but I want 3 weeks of information. I'm working to the power of 3. So 21 days is about that. And we've had an average range of about 75 pips on any given day. Does that mean we're going to get 75 pips today? Not, no, but it gives us something to go on, right? So 75 pips would take us all the way back to yesterday's highs and digging into last week's lows. So we've got breakout traders where it broke out over here, right? Trying to do that there. Breakout traders below last week lows, but potentially running into a trap. 80% of breakouts, I believe that's the estimate. 80% of breakouts fail. So if that's a breakout, then there's an 80% chance that that's going to fail, and that gives us a high probability setup for today, Friday. Profit taking, short squeeze, closing down the week, maybe to come, maybe even just into the middle of this week's range. And where would that leave us? Testing through 109, right, for a 50 pip move in the Wall Street session. and who's going to complain about 50 pips on the day, especially when it's all over within a couple of hours, and very little heat being put onto you because these parabolic moves tend to just keep going. You can scale in, scale out. You've got 15-minute candle rotations to reassess your position, your outlook, depending on the price action. Okay, so euro covered, I guess. Any questions on that? Not. Have I been lost again? Is my sound not working? Is sound not working again? No video. Only sound, video, only sound, no video. So no screen. Sound good? It's working great. Right, same scenario for the Aussie. It's been pressured due to noise. I think that's priced in now. We can start to ignore the noise, and we can start to look at these technicals. And again, same scenario. Plenty of shorts in the market. We closed up above yesterday's closing price. We moved up above yesterday's closing price. We've squeezed out those longs. We've got some aftermath of that squeeze. It's stalling. We are front side of the move, however, right? So be warned, but we can still have a bullish thesis. Sorry, I'm thinking here. If we come down to the 15-minute chart, we've had three pushers working the low, power of three again. Third and final push, squeeze, potentially. Okay, it's looking like we want to do that. That's the near-term trend line. Those are the near-term highs. A break above those highs, clearing the way for a squeeze higher. So that's our high and low. That's what we're working within. Will we put on the squeeze, come back in, get a discount to ride higher around the Wall Street Open? Perhaps. Would be a perfect storm for us to be looking for that long. ATR. Again, 75 pips. We've done 40 already. Yesterday's highs. There'll be stops above the Asia London highs. Low hanging fruit to target. There'll be stops above yesterday's highs. There'll be stops above the point of control for Wednesday, which is over here. So another one for the watch list. Okay, guys, what else was I asked? US 30, and I'm sure someone had a cross for me. Is it a Euro Aussie cross? Fire away. Let me know what you want to see, guys. I'm scrolling up through the chat trying to find what you want me to look at. Please let me know again because we got distracted here with the audio not working, etc. Sterling Swiss. A similar setup to the yen. What we were talking about on the yen. Right, it was the first red day on the yen. Pressure to the downside. Sterling Swiss. Already quite strong on the downside there. Let's get rid of these markings. Right, well, from a weekly template, we're up high, looking for the short. Simple stuff, guys. If we're up high, we're looking to short. Okay, there are equal lows. Yesterday's lows, the target. A break below there for Wednesday's point of control for a downside target. The ATR around about 70 pips. We've done 37. 70 pips takes us all the way down to below Wednesday's low. Stops below there. Targeting Tuesday's point of control. Okay, so we've got 3 stages, 3 levels. So level 1, 2, 3. So level 3, level 2, level 1. Looks like we can clear level 2. Okay, all of this in here. So these targets are reasonable. 111.40 rounded up to 111.50. All right, if we can come up a little bit, that would be nice. We could get 50 pips out of an explosive move to the downside if that were to occur around the Wall Street Open. Just thinking here, 1, 2, 3 pushes up. That's when we get a third push here. So we're finding resistance at at the point of control and yesterday's close. So that appears to be a key area on the chart here as resistance. Maybe we can pop through it for a final push before rolling over. So 1, 2, third push before the move lower. So we can add that to the watch list. Under the bracket of sterling. Now, if you're going to take sterling and any of these ideas, you want to be looking for what's relatively looking more opportunist, more favourable. What ticks most boxes? Okay, so that's your homework if you're going to look at these pairs, and I'd be cautious taking all of them because then you're leveraging all of your risk. Really, I mean, you can split it up. Let's say you wanted to risk 1% on sterling. You could, 0.25. I mean, that's not advice. It's just education. So you don't want to go all in on all of these pairs, because you'll get the same outcome for all of them, but it'll be staggered. You'll get staggered results. One will take off before the other, and so forth. I mean, you might be able to say short sterling yen, say that takes off first. I mean, if yen is stronger than the Swiss today, we don't know. At the moment, I could look at the, what do you call it, the currency strength index, which is an indicator CSI. Um, it will take some time to load up. Oh, no, it won't. Okay, usually it does. So let's make that nice and big, like that. If we put it on an hourly basis, that might take some time. No, it hasn't. Okay. So you could look for, well, what's the strongest out of those variable currencies? So we've got the main currency, which is the sterling. So Japanese yen and the Swiss franc. I believe the Swiss franc is the red one. We can check that on the indicator itself. So anyway, the yen is stronger than the Swiss. I don't know if the Swiss is the orange. I can't tell on this, but it's the stronger of the two. I mean, you can obviously look at the Swiss yen on the chart itself. So you'd expect then, therefore, for the yen perhaps to be the one that takes off first, and then if you can get that into a break even, and then if you've got a setup in sterling yen, you can add there, and that would be an alternative to adding to your sterling yen. You know, you can move that to break even, and then go all in again on sterling Swiss, and effectively you're increasing your risk on that move across sterling yen and sterling Swiss, betting against the sterling. So you're adding to your position effectively, short sterling. But I wouldn't go all in on all three because you're doubling up your risk. If that makes sense. Um, US 30, I'm going to look at, that was asked for recently. Right, let's pull this back. So we've got that. Right, so this is a market we've been calling for quite some time. Let me pull this back to the beginning. Right. So we are obviously we're in a strong downtrend here. We're coming into this neckline of that harmonic formation, right? That could be expected to act as support. This is on the daily chart. So we're coming into a potential demand area. Well, up here, in fact, was probably the bulk of that support. Maybe this is a fake out of that, or maybe we're just going to keep going down. But we can drill into our nearer term charts to gauge that. Have we broken any major structure? I'd say that we're breaking out of, as I said. So I'm going to regard that as structure that we're breaking at the moment. So let me pull that in. So technically, we're breaking this trend line now that we've broken that structure. So this now should be red as well to indicate that it's broken structure. Okay. However, 80% of breakouts fail, so we'll be looking for the pullback. And if we measure that on a Fibonacci, coming back into the 61.8 would be meeting prior support. Okay, so that's the major support up high. Resistance, old support. Okay, on the daily chart. Coming in, right, so that area was indeed a structural point. Right, so we came up, made a new high, made a new low, a higher low, a higher high, a higher low, a higher high, etc. So that was the lowest point, well, up here, in fact, you could argue. So, yeah, there. That was the actual break of structure over here. Get that right. Okay, but this also is significant down here because it was the support that essentially took the market much higher. All right, it was the last low before that rally. If that makes sense. So I'm leaving those both in as, and I'll also put this in as a potential resistance. Okay, so those are our upside levels. If we come down to the hourly chart, all right, can you please give me number? I can't see video. I'll give you a screenshot. Um, so presumably you want a screenshot of the near-term stuff. So let's do that for you. So the average true range is 300 or 350 points, more or less. So that takes us up to that high. That solid line because I can't see what's going on. Make it dotted. That's better. Takes us up to the trend line resistance. Okay. So if we draw a box on that, down low, looking for a move up into level 3. Okay, so let me send you a screenshot and some audio around this. So we're dumping ahead of the Wall Street Open. So looking for the pump that follows the dump to take us up towards the daily trend line, counter trend line resistance, which is the dotted line that you'll see in a moment. Well, I'll send you it now. I think I've got anything more to work with on this. So there is the screenshot of the US 30 in the chat right now. So you've got that dotted line from left of the chart to the right going sort of vertically up. And then you've got the horizontal lines, which are resistances. So beware of those if this market does turn around. If it turns around, those are the levels to look for a rise up into level 3, which is the top of that box on the right that I've drawn, above 0.66. You can barely see it, but 0.66 on that box. Okay, there'll be a recording posted in a moment. We've still got plenty of time before the Wall Street Open. Hour and a half. Okay, I'm going to go to dollar yen now. We've done the Dixie. Dixie just is essentially we're looking for. Great. Well, we've got that potentially that final push up, and then hopefully we're going to get the reversal. Dollar yen. Dollar yen. Dollar yen. So yesterday was our first red day. We pumped up, broke the prior day's highs. The pump was met by the dump. The dump was met by the pump. The pump was met by the dump. Right? See how that all works out? What are we getting here? We're getting the pump. What can we expect? Not rocket science. None of this is rocket science. So we've got a first red day. That's bearish. We've got a pump before Wall Street open. That's bearish. We're still below yesterday's closing price. That's bearish. We're relatively high up. Well, let's have a look exactly where we are on the week. Right, we're heading towards level 3 of the week's range. Level 3, level 2, level 1. Right, so the nearer we are to level 3, the higher the chances are that we can come down. Right, so that's bearish. Volume trapped up high. That's bearish. Breakout traders that are trapped, desperate for this market to come back up and break and give them a break-even scenario, right? And if they do that, they'll be selling. So that's bearish, right? And then we're going to have new money looking for the shorts, looking for a long squeeze. That's also bearish. So it's pretty bearish all around, right? Did we break structure? Yes, we did. That's bearish. There's the structure that we broke over here. So let's draw that in. So it's regarded as support currently, and it's broken. It's a broken down market, all right? So what we're looking for um, is resistance for the continuation lower. And if we get that with dollar weakness, of drop in yields, dollar weakness, then that's a perfect storm, really. All right, so that's on the watch list as well for today. So do you see how all of this stacks up? Okay, so we're going to move to Euro sterling. Right, anyone care to hazard a guess what my bias is for Euro sterling? I want 3 answers to that question. 1, 2, 3. Okay, 2 out of 3, guys. Well done. Right. So we are on the backside of this prior bearish resistance. We broke this level over here. This was the lower high before the lower low and the breakout. I'm not going to count that pin and that. Well, we could do. Let's. Seems to be pretty stacked over here as well. So we've got a breakout here. We got that led to the breakout over here. And now we're testing yesterday's high, acting as resistance. Front side of the bullish trend. Okay, the reason why we are bullish and not bearish, look how many days we are short. A green day is coming. We're already above yesterday's closing price. We're stacking up above it. That's bullish. You might argue, well, on the day, we're high up. Yes, but we're in a broken down market or broken up market because we're breaking these old highs. We're on the backside now of that old resistance. Plenty of down days to push up against for the long squeeze on a Friday, right? So we're low down, so we're high up on the day, yes, so it's not ideal, right? In hindsight, if this was a rally, you would say it wouldn't be. It is ideal, but it's not ideal if we're trying to buy low. Um, there might be more favourable opportunities elsewhere. What's the ATR on this? 46 pips. Now, those 46 pips are the equivalent elsewhere of 70, 80, 90, 100 pips because of the strength of sterling. So, um, if we can get 20 pips out of euro sterling, that's very profitable compared to the sterling dollar exchange rate. Um, so 40 pips. How many we've probably already done? Almost 40 pips. So again, when you look at that, you've got to be thinking, well, how much more is there left in this recovery? So it's already going to be a first green day. Perhaps this is better left for a setup for next week, trying to chase something that's already perhaps made its move for the day, given the ATR. So it's already done almost 40 pips. Well, it's done what? 36. So there's 10 pips perhaps left to the upside. But in other places, there are 70, 50, 40, 30 pips to be had. And it's not necessarily pips that we're trying to make because it's what you do with those pips. I mean, if this was just screaming, buy me, buy me, buy me, you could put more risk on. So therefore, even if it only moves 10 pips and you put on a higher than average level of your risk allocation, so whatever that might be, this is not advice, it's just education. So let's say you normally on a setup that looks sort of like a 70-10, a 70-100, a 7-10 setup. So from 1 to 10, 10 being like the best possible scenario. So you've got 3 weeks of, say, longs in the market. So you're looking to short against those. You've got 3 days of longs in the market. You've got 3 sessions of longs in the market. You've got 3 hours of longs in the market. You've had 3 pushes to the upside and it's starting to capitulate, then that is a massive 10 out of 10 opportunity. Well, instead of risking 1%, you might put 3% on. And you might take the majority of that off after a 10 pip move, and relative to trying to hold on to a day, trying to hold on to a trade all day, trying to target 100 pips, but you've only got 0.5% on, then it works out that the less pips that you make with higher percentage risk is the trade that you might want to take. Because A, you're going to make more money. B, it's less stress when that thing gets moving, takes less time, and you've got the rest of your day to look at other opportunities, be it on the screen or in your personal life. but that's euro sterling. So the outlook is bullish. Aussie CAD, Aussie CAD, a bit jumbled, but again, 3 days of downside. We're trying to move up. We're working the lows at the moment, the lows of the day, one, two, maybe we'll get a final push and a correction higher. If we pull this out to a 4 hour chart, I'll get a better perspective on that. So we've got a bullish impulse, a correction. How far in that correction are we coming into? We've done a 61.8 already. We've got an M formation. So if we can get above yesterday's closing price, 86.75 ish, then the outlook will be for a continuation to the upside. If we can't, then continuation to the downside in line with the bearish trend. And if we can get above 38.2, 86.75, then perhaps we're coming up in a long squeeze. There are no expectations, there are only possibilities, and there is a possibility that we can have a long squeeze in the US dollar. We're pumping up ahead of the Wall Street Open. That's perfectly fine. We're making new highs. That's even better because if we are, yeah, so the possibility is for a correction. We got a first red day yesterday, right? So shorts are trying to come into this market, and this is just a better price to be selling the dollar. That's all I look at it as that. Of course, it can continue. That's why I'm only saying it's a possibility that we could come lower. And if we do, that's going to trigger an awful lot of opportunities that we've been looking at across the board, right? And the stocks pumping lower for the dumping lower for the move up. In the euro, in the Aussie, everything that we've looked at. Now we've got that capitulation here in that sterling that we were talking about. So it came up, you've got trap traders, and it's continuing its lower path. A red day, yeah, just look at these indicators. So let's go on to the dollar for you again. So look at this indicator, which is, if you read my education video on this indicator, it explains all of this. It's in the Discord channel. It's got the logo on the video. The thumbnail is of the trading view. So that's how you'll find it in the education section. There are two 20-minute videos that explain this template and sort of delves in a little bit on the methodology that I'm using to try and cherry pick through this board of assets, the setups, what I'm looking for on any given day when I come into the session, and how I filter down to what are the best looking trade possibilities for the day. So with regards to this indicator, which is the daily close markers, it's just an indicator that helps me look at the closes for each given day. So if it's a green arrow, it means that the day before that green arrow was a bullish close. So if we look at yesterday, I've also got an indicator here, yesterday's open, high, low, close. So there it is there. So that's where the market closed. It's red because it was a bearish close compared to the prior day's close. It was up higher. And you've also got that red market. So it's just something that helps me to easily identify as I work through many of these currency pairs and so on, to easily identify that it was a bearish close. So bearish close, not always, and in this case, at the moment, uh, it's a bullish day, but a bearish close would tend to be followed by the next day giving you bearish opportunities. So, because there are bears in the market, there are shorts coming in, there's new money potentially that's coming in, trying to pull the market down into this series of longs in the market. They're all in the money. Stops below all of these lows, there'll be stops, and that's the thesis. We're going to try and come down and target those stops. So if we can catch a market that is exhausting, so for instance, if the US dollar starts to exhaust in this rally, which it is, how long have we got until the New York Open? What time is it in New York? Right, so we've got just over half an hour, 45 minutes. So what we want to see here, this doji or hanging man, whatever it's called, shooting star, um, we want to see a bearish 15-minute close now. So we've got 11 minutes until the close of this candle. If this closes as a wick, if this closes the same as that but even lower, excellent. So then we've got, and then if we get another one, well, that's three bearish closes, and we can expect for the Wall Street Open for that to explode to the downside, and for all of our currencies that are weighed against the dollar, directly or indirectly, to give us trading opportunities. And then it's a matter of having those on your screens and looking to see what price action on what pair is giving you the higher probability setup for you to take. And then it's a matter of timing that and getting involved on, say, a 5 minute or 1 minute chart and trying to get yourself into a profitable position, taking some money off, getting paid for all of the analysis that we've done this morning, right? So it can be a 3 hour day. You can spend a couple of hours, or even less when you get used to it, but a couple of hours analyzing this board of setups, currencies, assets, and then your trade itself can be done with in half an hour. And then you close your screens so that you're not tempted. You set a profit target for the day. Whatever that might be. Might be 0.5%, 1%. You might want to make 2, 3, 4, 5% on your day, and that's it. And move on. And if you take a loss, then so be it. Don't keep coming back to try and trade. Get yourself to a high water mark, or just that's a loss. It's fine. They happen regularly. Doesn't matter. The cost of doing business, your time, and a few losses here and there. That's all it is. Okay, we're going to wrap up now, guys. Um, New Zealand dollar. New Zealand dollar tends to track the Aussie, so whatever the Aussie's going to do, and we've covered the Aussie, so that'll be in the video if you want to review that. But bullish on New Zealand dollar and dollar Swiss. Well, if we're expecting a sell-off in the dollar, with dollar Swiss being so high up, like dollar yen, on the session at least. Dollar Swiss high up on the day. I'll leave you to guess whether I'm bullish or bearish. We had a first red day. We're high up on the session. Where is the money? We're up in level 3, right? We're tapping into the highs of the week. So we're level 3 on the day, level 3 on the week. It was a red day yesterday. Sellers are coming into the market. Perhaps they're waiting to pounce. Now we're still front side of this bullish trend. Okay, we haven't broken any structure yet. On the 5-minute chart, still not broken any structure. On the 1-minute chart, we've broken structure. So maybe a scalping opportunity. It's coming up, but be warned, we are on the front side of the bullish trend for the day. This is the first peak formation that we're starting to see. It's an M pattern, it's a topping pattern, right? We're breaking structure, but just with a 1-minute close, this can easily come back up into peak formation. It can easily make a new high. But if we start to stack up below, then that's giving us a good thesis that this becomes trapped volume, and the market around the Wall Street Open could well move very quickly away from that trap volume and start eating away at the support of the day's bullish trend. And then it's up to you on how you want to deal with that. But bearish on this pair. Overbought and oversold conditions, you don't need an indicator for that. You just need to look at the chart. If we're high up on the week, it's overbought. If we're low down on the week, it's oversold. If we're high up on the month, the week, the day, the session, the hour, you can regard all of that as overbought and oversold. Yeah? You can use the point of control. So I've got the point of control for the day. On this one, for today, it's down at 87.80. This market is displaced. It's moved well away from where all those volumes, where transactions were agreed the most, where prices were agreed the most. You can regard it as a fair price. So we're overbought on dollar Swiss on the day. It's not to say it can't keep going up. Just because conditions are overbought doesn't mean that the market has to come down at any given time. But the thesis is it will do at some point. All right, so I don't really use overbought indicators. It's just all there. It's all in the price. It's all on the chart. The higher up you are, the more overbought you are. That's the way I look at it. All right, guys, let's use that information, and I'll send out a recording of this video now for those that weren't here. Maybe you'll be able to sift through it and get to the currency pair of your choice ahead of the Wall Street Open. Well, we've got 4 minutes now until the new hour. New hour opens, new 15-minute opens, new 5-minute. All of those are important. You tend to see movement. So I'm going to close this down and set up for the Wall Street Open and see what's hot. Good luck out there today. It's Friday. Enjoy it. And at 10 o'clock, so half an hour after the Wall Street Open, I'll be getting together with Yohei and we'll be talking about what's happened this week, the important fundamentals, the technicals on a longer term basis, and looking ahead for next week and potentially what's happened in Wall Street Open, what's worked, what hasn't, what's still running, what opportunities there might, you still get opportunities at 10 o'clock New York Open, New York after the Wall Street Open at 10 o'clock. That final hour around the equities open. They could, the market, the first hour of Wall Street opening could be the setup for a little bit later in the day. Okay, guys, we'll leave it there.